Happy Labor Day, everybody, and welcome to the Locke in Your Success Options Trading for Income Weekly Update for Labor Day 2014. Before we get going, we would like to remind you that the presentation is for educational purposes only. We're not broker-dealers or financial advisors, and we're not making any specific trade recommendations. Also, please note that hypothetical computer simulated trades are used in the presentation, and that although the results are believed to be as accurately represented as possible, there may be differences with live execution. Also, please be aware that the risk of loss in trading options can be substantial, so please be aware of all your risks prior to placing any trades. And if you're watching this in some other venue, please come on over and check out our website at lockinyoursuccess.com, as well as our programs, the M3, Bearish Butterfly, ROCK, M21 group coaching, and the Trading Triangle one-on-one coaching program. And make sure you come on over and join our mailing list, get the free report, 7 Secrets to Becoming a Successful Trader, and sign up for this weekly webinar. And stay tuned for our programs currently in development. All right, so let's take a look at the markets. We got pretty much what we expected last week in the Dow. We were expecting the market to come up to the all-time highs and probably back off, and it did come up to the highs. It backed off a little bit, but not very much. We had the SPX, which we were expecting when the Dow broke to its all-time highs. We're expecting this to go to about 2005, and we pretty much hit 2005 to the number, so that's pretty much as expected. Also, I was expecting the market to retrace after that. That did not happen, and the reason that didn't happen is that we got this breakout in the Russell up over this 1170 area, which was a little bit unexpected. I did expect the 1170 area hold and for the Russell to come back down into this trend line here again. However, as soon as it came down into our primary uptrend line, we bounced back right back again on Friday. So this is changing our opinion a little bit. It's giving us a little bit more bearish. A little bit more of a bullish bias. What we've got in the markets in general, though, is we have buyers coming in and buying the market very slowly under low volume. And the reason the market's going up with that is that there's just no sellers. All the sellers are kind of waiting for the market to go up, holding on, hoping that it's going to go higher. And like I said, the buyers are coming in. I think everybody's nervous. So what we tend to get here in this type of a situation is the market tends to start to push past some of our technical levels. It doesn't really trade properly anymore. And another thing that happens, which is a little more concerning, is we tend to get these very, very large surprise moves kind of out of nowhere. So all of a sudden people will start selling. They get a little scared, and since they're a little jumpy, you're just going to get, all of a sudden you get these 40-point moves out of nowhere. And of course, if it does break out, you're going to have some people jumping on the bandwagon coming in, and that's going to give us an up move. So while this seems to be a really good market for a high gamma trade because the market's not moving around a whole lot, it is kind of risky. I mean, if you roll the dice and you take that risk, and we don't get that large move, then of course you'll do very well. What I found in this type of a market, though, is we will typically get a large move at some point during expiration. Usually if you're in a high gamma position, it tends to wipe people out or kind of wipe the trades. So just something to be careful of. Watch your backs. As far as where we're going now, because we're at all-time highs with the Dow, the NASDAQ is broken out, and it's pretty much held its highs from last week. We have the SPX, which is pushing higher, made new all-time highs this week. And we have the Russell that's past its primary resistance point. So, path of least resistance is going to tend to be up, but realistically, with no news, grind up is probably what we're going to continue to have. That said, I also wouldn't be surprised for a very harsh down move if anything happens. So what we have for next week is really a coin toss. I'm really not making any predictions for next week because we really just don't know. What I will tell you, like I said, is I do not like being in a high gamma position close to expiration in this type of environment. Even though it may pay off, should nothing happen, we're very, very likely to get some sort of a very harsh move ahead of time, and I don't like those positions. That said, why don't we take a look at our positions And we'll start with a bearish butterfly for September. Now this is a close to expiration trade. We're in 2/3 as of Monday. This is a pretty high gamma position, so therefore I do not like this position coming into expiration at all. Basically what happened with this position during the week though was absolutely nothing until Friday, and the primary reason we did something on Friday was that we went into expiration guidelines. So if we come to Friday, we were in 10, 1140, 1160 butterflies. We're 21 days to expiration. I want to get my delta down. Now, since we normally, our full expiration guidelines are telling us to be minus 250 delta going into the overnight on Friday. Since we just hit 21 days to expiration, I'm okay being a little higher than that. So I came in here and I went in at 330 at about minus 360 delta. Perfectly comfortable with that 21 days to expiration. And to do this, basically what I did is I added in my 1180s and I sold out of 5 of the 1140s and put us into minus 359. The position's still up a little bit of money. I think if at the end of the day it was up over 1,000, but this is what we look like here. We're negative delta. If the market continues to grind, this position will be fine. It is at fairly high risk if we get a really harsh down move of actually losing to the downside. Should the market continue to grind and we get closer and closer to expiration and we get a really, really big move, it's a possibility we might get some sort of a loss here. But what I'm looking to do here is get out of this at 10% profit and leave. I almost hit that number on Friday. We had a pullback earlier in the day. This thing was up actually about 9%. Being in a live position, I'd have pulled that thing right off with the way I feel about the market right now. And being that close to a reduced profit target, I'd much rather be playing in October. But this being the guidelines trade, we will go with guidelines. There was no way that I would have been able to close this live at 10% profit. So we stayed in. We got, and it continued up move later in the day. We drew back down again. So this is what we look like here. If realistically, if we get a light down day, maybe 5 points on Monday, or not on Monday, but on Tuesday, good possibility I might be able to get 5,000 and close this out. So we're just kind of looking to get out of this. We'll see what happens. If you want to take a look at the T-log on the position, here's what we look like here. We just bought these 1180s and went ahead and sold out of the five of the 1140s. So from here, the next trade I want to look at is actually our ROCK trade for September. If you remember last week when I put this on, I wasn't terribly fond of this one either. Same reason. I just don't like the market environment to be high gamma right now. I'd much rather be, even though it may work out fine, I would definitely much rather be in a lower gamma M3 type of trade. So if we pull this back to Monday, I'll show you what we look like Monday afternoon. This is actually, as far as the ROCK trade goes, this is actually a perfect looking trade. This is a very nice trade. This is what we looked like. The Greeks were perfect, really, really nice. I'm sorry, that's as of last Friday the 22nd. If we pull into Tuesday, what happened on Tuesday is we hit our maximum delta limit. So I scaled into the rest of the 1180 call butterflies, and that didn't bring our delta down. It actually brought it up, which is sometimes the case with this. And to correct that, I actually I added in 5 1200 call butterflies. And adding those butterflies brought our delta down to about minus 197. I like to be minus 180. 197 was close enough for the day here. Here is where we did this in the T-log. All we did is, like I said, add the 1180s, add the 1200s. And this is what we're looking at like as of Tuesday. And then if we scoot this up to Friday, there were no further adjustments. We're up about $900. Our delta is really nice. There's absolutely nothing wrong with the position from a ROCK trade. It's actually classic ROCK trade, and it's looking really, really nice. Again, I just don't like the prospect of being in a high gamma position given the market environment right now. All right, so that is the ROCK trade. If we go to the September M3 trade and we come back to Monday morning, this is what we had for position. We had our 1120 butterflies with 5 1120 1130 verticals, 5 1120 1140 verticals, minus 63 delta, which is a touch high, but that's because we gapped up in the morning. Here's what our position looked like there. By Monday afternoon, I did want to correct that delta issue that I had. So to do that, I sold 5 1130, 1140 put verticals, brought us down to minus 44 outside the tent, which is pretty much normal. If we go to Tuesday, with the continued up move, another 10 points, what we did at the end of the day on Tuesday is added 5 more, or added 5 1140, 1150 put verticals at the end of the day, brought us down to minus 24, and this is the position we're looking at here. I have my long strikes at 1170. I have a roll point. Technically, if the market hangs out over 1180 for a day or two, then I'd be looking to roll this up. As of right now, this is actually positioned quite perfectly at the 1175 number. If we come to Friday, there were no further adjustments, and the market's down slightly from where it was before. Our delta's about minus 42, which is fine. Our vega is negative, which is good. Our theta is positive. We're up about $1,000. I do like this position here. Look at the protection we have if we get a big move. You know, the bad part about being positioned like this is if the market sits and kind of grinds and runs sideways, we're not going to make any more money. However, it is very protective. I mean, I can get a 30-point move down here and not even be slightly really affected to the downside. Matter of fact, I'll be better off. And if I get a big move to the upside, then I'm really well off as well. So I do like this position the way that it sits. If it forces us to roll up higher, I'll probably like it less, but we'll see where it goes. So that is the M3 position for September. And the last September position would be the September V Condor. So this position here did actually get an adjustment on Tuesday. If I come here, what I did on Tuesday is we had an 1130 straddle, and I turned it into a 1070 1190 strangle, and we did that on Tuesday after the second big move up in the market. Here's the T-log for this here. I actually did that in the morning. I was actually considering doing it on Monday. I decided to hold it one more day to see what happened. And then we had the higher move Tuesday. I said, well, I'm gonna go ahead and do that. Lock in some profits here. So if you take a look at what we got going on now, is if the market stays relatively flat, I'm going to be taking a 32.80 profit and expire this. Really, to have an issue to the downside here, it's not impossible, but definitely not concerned about it. And as far as the upside, I'm not really that concerned about this either. And you know, it is possible we may run the short strikes at some point, especially if we get some sort of a hard breakout to the upside. But it's very unlikely. And this is going to actually start coming up fairly quickly here. I don't think we're going to have a problem. I'm fairly sure we're going to end up just expiring this thing here at the $3,500 level, or wherever that happens to be. So that's what we have for September. The October trades, with the small market movements in general that we've been having, we really haven't had to do anything a whole lot here. The only one we did have to do something on is a V Condor. We've been in this for a little while. The market's been pushing our upside, and on Tuesday, I think. Yeah, on Tuesday, ended up buying back one of these 1230s just to get our delta down under minus 100. This is what the position looks like as of Friday. Delta numbers are still good, and the position's up a little bit of money. So nice looking V Condor here. I'm not really anticipating too much trouble here. Possibly buying back another short or two if the market runs higher, but it'll probably be fine. And the other two trades we have on are the M3 trade for October, which has had no adjustments, and this is how it looks for our October position. Beautiful, beautiful classic M3 type of T plus 0 line, nice and flat. And the position is pretty much flat profit and loss. It's only been on a week and it's doing well. So the last position would be an October Bearish Butterfly. Again, no adjustments. We are down about $820 which is to be expected because the market's been up since Friday. But this looks really good. I'm happy with the position. I don't really have too much of an issue. If we take a shot to the 1210, 1220 area, this should be perfectly fine. If depending how the market sets up later in the month, if we get a prolonged sideways move, I might start getting concerned that we may break over the 1210 area. I'm actually starting to get slightly concerned about that now with the bullishness of the market, but realistically, I do not believe that we're going higher than that at this point. So like I said, our mind may change depending on how the market moves around later in the week, but or over the next 1 or 2 weeks. As of right now, liking the position and everything's going fine. So that's all we have for positions. I wish I had more to talk to you about as far as market direction. The reality is there's really nobody really knows where it's going right now. I got a lot of professional directional traders that we deal with that have been trying to hit the market short for the last couple of weeks because they're thinking, hey, the market really should be coming down, at least for a decent short-term trade to the downside before it goes higher, and it just simply has not been happening. So these guys have been getting beat up on their positions a little bit doing that. Of course, if you're long the market, then you've been probably doing fine. And of course, neutral's been well, as far as the people I've talked to have been, they've been doing fine market neutral trading almost anything right now. So, although we do get pushed a little bit to the upside, but not enough to worry about. All right, so that's what I have. I hope everybody has a fantastic day off here on Monday, and we'll talk to you next week.